After we made so much money on the Pepsi trade on the earnings yesterday, I want to go over earnings on Market Chameleon and just do a quick tutorial, show you what you can find, where you can find, and all that good stuff. So let's get started. Market Chameleon, if you haven't signed up already, link in the description, 7 days trial. Let's do the disclaimer. Feel free to read and know that this is not a financial advice and it's all for entertainment purposes only. And let's get to it. So when you sign up to Market Chameleon, you can go to the earnings tab right here. And in here we got ourselves a couple of options. You can click like earning stock pattern screener to do a screener by yourself, but I like to do two things. I like to focus on either earning option strategy screener, I'm gonna show you this real quick, as well as today opportunities, which I'm also gonna show you as the second part of this video. So let's start with the first one, earning options strategy backtest screener. And in here you got a couple of options, but first of all, make sure that this is set. Market Chameleon preset. It's already preset, the screener that Market Chameleon default put, so it will have like an edge in your favor. And you can change to actionable opportunities for the next 5 days. This is interesting. Option at the money straddle, volatility crash, stronger. There's a lot of stuff to play around with, but let's just stick to the basic Market Chameleon presets. And in here I like to do a couple of things. First of all, I like to change the market cap to over, let's say, I don't know, 100 billion. I prefer to stay like good numbers. I prefer over 20, but let's stay with the big guys, over 100 billion. You can do ETF, yes or no, it's up to you. And in here I can switch all this. I like to do the best return, let's say above 50%, and not worst return if the standard deviation, and Sharpie average return win rate above 60, and you see it goes down. It was a lot more. Now we have 219. It was probably a lot more. Average return, okay, let's say over 50%, and now we got a lot less. We got 15 pages instead of 200 pages. And in here, let's see if we can, next earning, it tells us when is the next earning, July 25th. Let's see what we got. ABBV, okay, and it's in Adobe and all that stuff. So let's find something. And just so you know, look what we got. Win rate percentage 75%, 92%, average return 110, 107, medium return, best return, okay, so those are crazy stuff. Worst return, so I want to stick to the one that makes me the least losses. So I'm gonna click on worst just for the example. I want to click twice and see the worst return right here, 3%, but I want something that I know. So lean, I don't know who they are, so we got AMD, put butterfly spread, and something else. We got Goldman Sachs, we got CRM, we got Costco, Disney. There's so much stuff. Costco, they just publish right now stuff with their membership fee that they're upping the price. Let's see the win rate in all of those. AMD is 67. I'm just looking at the guys that I know. 75%. Costco, Disney 75%. Average return. The AMD is 79. Okay, medium 7%, something good. Costco 27%. Okay, and the best is the 200% and 94% return on standard deviation. So let's see what the trade. Next earning is this, 54 days to earning. Next open date. Okay, next earning. Okay. So when do we take the trade? It tells you exactly when to take the trade. 1 day after, okay. Where's Costco? 2 weeks before and 1 day before. So I want to look to something like super close, like next week or something. See here, July the 11th. This is basically this week. So if we look at tomorrow, for example, next open date, here we go. We got ourselves Wells Fargo and JP Morgan. The banks are gonna publish. It's going to be interesting. JP Morgan, Goldman Sachs, American Express. So it's going to be an interesting day. And the strategy is basically open the day of the earning and close basically 1 week after. The worst case, you lost it all, but the best case, you made 200%, 400%. We got all those stuff in here, and you can click if you wanna explore the strategy exactly. Then you can just click on the symbol and see what we got. Okay, so that's one thing I want to show you. You can stay here for like hours and just do some research and dig. The second option, which is also earning, you go back to the earning stuff and you're gonna click on the second one, today's opportunities. This is much simpler. It just tells you what's going on with some trade opportunities for the day. And we're gonna do a win rate, average return, all that stuff. Same thing. Wells Fargo, PNC, we got more Wells Fargo, Pepsi. This is what we did yesterday, where there was a trade there, 157, 152, the put spread, and it closed around 163 or something. So that was a great winner. United Healthcare, all that stuff. I wanna go by theoretical edge, okay. I want to make more money with the edge of Market Chameleon, so we go here. Now we got United Healthcare, Bank of New York Mellon. So basically it tells you to open the trade. Let's see for the 12 of, okay, so we got only 3 pages, so we need to do the 12 because I'm shooting this video at night time. Okay, so it doesn't give me, but it will give you tomorrow morning, but basically it tells you all the stuff, just like the one on Pepsi that we did. Basically, that was a good winner, as I said, and waste management, something that took my eye. Also, if you see stuff that says like 2 weeks before, I mean, today or tomorrow, it's not the end of the world, but if we take the biggest edge, we got ourselves, let's say, something that I know United Healthcare, for example, and you click here on this trade, it tells you next open date on the 11th and close the trade on the 16th. It tells you close the trade 3 days before. So even if you miss it on Thursday, if you open it on Friday and close it 3 days before, you have an 83% chance of win rate, average return of positive 12%. Okay, we got a Sharpe ratio of 0.56, and if you click on the trade, it tells you what's going on. This is just one example of, as you saw, like millions upon millions of trades, and it tells you option strategy detected. Price today, United Healthcare 504, okay, and it tells you what to do. And let's scroll down and see what to do. So basically it tells you, so this is like a calendar stuff. Sell the July 19 put 505 and buy the August 9. Interesting. So you sell one for next week and you buy the August 9, which is 3 weeks later, the 480. And if you click here, run analysis, it tells you what's going on. This is the beauty. Look at this. You are basically getting a credit of $660 compared to what you should have got, which is, wow, that's pretty awesome. You should have got $216. That is interesting. You collect $660 up front because you've done this. Look what you've done. You sold the put and you collected 1,340, and you bought the put for 680. So your net income is about $660, which is pretty insane. Okay, and if you go to the graph, you are already here, almost, I think, at the top of the range. You collect, your max profit is $1,100, okay, and it goes down and stays around 700 if it keeps going up. If you're bullish on United Healthcare, you make between anywhere 1,100 to 700 by expiration, and your max loss, it goes down all the way. If it drops like 10% from here, you lost like $1,500. Can it happen? Sure, anything can happen. But if you're bullish on healthcare, that people are paying $500 a month for a yearly physical, and that's like mandatory unless they take it from your work, so your work person pays for that. I mean, it's good money to be the owner of United Health Group and all those companies. Basically, we got implied volatility of 100%, $500 today, weekly, yearly range, all that good stuff. There's also dividend in September. So that's something to consider, and you don't hold it forever. Again, you don't hold it forever. Remember the strategy. You just buy today, for example. That's what it says. Buy 3 days before and close on the day of the earning. And it tells you exactly. You buy on the 11th, so if you miss on the 11th, tomorrow is the 12th. Not a financial advice, it can go to zero, but just for the example. And you close the trade on the 16th of July, and the option expire on the 19th. So you hold it for like 4 or 5 days. That's it. That's all you do. And look at this, the theoretical current market price, you a credit of $660 compared to $150 credit. That's insane. That's literally insane. You got 83% chance of win rate. I might actually take this trade. I'm gonna look at this tomorrow. Official name of this is diagonal put spread. Sell at the money nearby and buy out of the money far. And this is the graph. This is interesting stuff in here. Short one at the money put near, and long 125 delta put far. Okay, and that's what you do, but you're not holding it forever. You're just holding it for 4 days, and you close it on July 16, and you expect to make 83% win rate average with an average return during those 4 days of 12%. Something to consider. This was valuable. Tons and tons of trade ideas using Market Chameleon. Link in the description below. 7 days trial. I'll see you next time. Yeah.